What's up, you guys? Zoe here from oneglancetrader.com, and in this video, I'll be walking you guys through my 10.5K realized loss on Workhorse. Now, there was a reason why I decided to sell my Workhorse position, which again I'll walk through inside this video. But the reality is there is a trap when you sell options, and when you sell options for premiums for income, and I fell into that trap. I shouldn't have no been anywhere near Workhorse inside the first place. And one of the things that I preach a lot about where on my channel about options trading is be prepared to get assigned on a stock that you don't mind holding at a current price, right? And when I made my first video on YouTube about that, making that relatively clear from the get-go, I'd already made the mistake, buying and holding Workhorse back a year ago when I was making my first ever options videos. So what I want to do inside this video is go through a real example, because not many YouTubers, when they talk about selling options, they talk about the wheel strategy. They talk about how you can make thousands of dollars passive income, which you can, right? I released a video a few weeks ago where I showed my realized gains for the year, which was around $21,000. Now, I took the strategic decision to sell my Workhorse position um, on the day, 4th of April, one day before the tax year ended inside the UK. So my $21,000 realized gain is actually, what's that, 11k realized gain for the year. So I made that decision to offset some of my gains, um, to encounter my losses. And what that's also done is there's something called tax loss harvesting. So my tax bill, instead of being 20% of 21,000, is now 20% of 11,000. So again, I've saved myself some tax there. And what you'll also see in this video is my actual loss isn't really 10.5 grand, because A, I've saved on tax, but B, I've also picked up, this is not taking into account the premium that I've gained along the way of holding shares. So it's a bit less than that, but we'll go through all those calculations in this video. So if you like the sound of that and you want an honest view from an actual YouTuber that is selling options, showing you my wins, my losses, and walking you guys through this, you guys don't need to feel this pain, and hopefully someone can learn from this video. And what I'm doing now going forward, you see some of the stocks I'm in now. I'm still inside a lot of stocks. Well, they're all pretty much growth stocks, really, bar like Google and Facebook. But I've started to shift my trading momentum into, my OGT stock options kind of trading system that I developed. And I'll link to that down below as well. My philosophy of trading has changed, and this Workhorse example has really, I've learned a lot through this. It's a $10.5K learning experience, but I've taken that hit, and hopefully you guys have kind of learned from that. So what we're going to do is firstly just give a very high level on the wheel strategy, which is the strategy I've been using to generate that $21,000 before it was offset by a 10.5K loss. So if, for example, you have, or you're interested in a $100 stock, what you do as part of the wheel strategy, you first start selling puts on that stock, which basically means I'm willing to buy 100 shares, or minimum of 100 shares of the underlying stock at a price of X by Y date. So let's just say, okay, I'm willing to buy this $100 stock, but I don't want to pay 100 for it. I want to pay 90 for it. So, and someone will pay me, I don't know, $30 premium. So it's this premium that you keep banking on every single week or every single month, depending on how often you trade options. It starts accumulating, and that $21,000, the majority of that is option income that I've generated throughout the 2020-2021 tax year. So normally what happens majority of the time, if you get your strikes right, look at technical analysis, support and resistance, all that kind of good stuff, um, the stock will trade above your strike. And if your stock trades above your strike at the expiration date, the option expires worthless. You keep your $30 and your collateral, in this case, for 100 shares of $100, $10,000 will come back into your account. And then you just repeat the process, right? If, for example, you one day get assigned and the stock closes at $89, you are forced to buy 100 shares. So in this it was $9,000, not 10,000. Sorry, because your strike was 90. You are then forced to buy 100 shares at $90 per share. So that's $9,000. Your broker holds the money and then will execute the order. So now I own 100 shares at $90 and the stock price is 89. When that happens, you then start, instead of selling puts, you sell covered calls. So that's basically saying I'm willing to sell my 100 shares of this particular stock at $90 or at $95, $100, 200, doesn't matter what the number is, at the expiration date, right? Generally, when you do the wheel, you want to do it at your cost basis, so at $90 or just slightly above at 91, 92, 93, so you get a bit of appreciation of the stock if your shares get kind of called away. And that's basically the wheel. You keep replenishing your money. If you get assigned, you sell covered calls when the stock goes back up, blah, 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 blah. But what if the stock just keeps going down, right? And I've talked about it on this channel before. The first way is, if depending on how much collateral and capital you've got, is you can sell more puts on the particular stock. So then let's say I own the stock at 90, and then I sell a put at 80, and then I get assigned the 80. So therefore my new cost basis is now $75. Or sorry, $85. Yeah. So is that right? Yeah, that is right. Yeah. Yeah. So at $85. So now I'm lowering my cost basis, so therefore the price doesn't have that much further to travel up. So then I get out of this. I get out of this strategy. But what if you sell more puts, you get assigned the puts, you lower your cost basis, but the stock continues to fall? And that is exactly what has happened in this Workhorse example. So if I head over to TradingView, this is the weekly chart um, of Workhorse. So if I zoom it in here slightly, so I owned. Let's put this on here. Let's make this a bit bigger if I can, and try getting the prices as well inside there. So over the whole period, I own 1,300 shares of Workhorse. So I was able to sell covered calls on this stock for 13 contracts, right? And my cost basis of those 1,300 shares was 13.58. And as you can see with this chart here, it never ever went back. And I think this period, if I zoom back out, that period was around May-ish or something along those lines. So it was about May. I got assigned my first shares back in 2021. So all the way from May till April, nearly a year, I was holding this loser effectively. And the amount of premium I made total on this stock was just over $3,000. So in terms of that 21K that I made, that I showed in the a couple of videos ago, 3,000 of that came from Workhorse, which is over 10%, right? Um, so with that additional $3,000, my break even, that's meant to say break even, um, is or was 11.22. So in my head, when I was around at like anywhere past this level here, I was like, if the price went back to 11.22, I would just get out of this trade. I would give back the 3 grand, right? I'll take the 3 grand hit and I get all my initial investment back, right? But it had a little blip over here, but then I was getting closer and closer to the tax year close, and I was looking at how much I was making, and I'm like, you know what? I don't really want this anymore, right? So I sold. I don't know if it was on the other on the sheet. It's not on there, but um, but I sold Workhorse at 550. So I sold it at 550 and it's now at, 357, nearly at all-time lows, which is probably around just above or just below rather, or just above 250. So I sold at 550, so near enough this kind of peak level here, I managed to sell out my shares. Still way, way below my cost basis price. But I managed to get out of it. So if we go back to it, if we look back at this one, so let's see if I can try to clear up some space around here so you can see, so you guys can see what is happening. So I made $3,000 in premium. My loss I took was 10,500. So my actual loss was, what was that? 10, 3, 7. So minus 7,500. However, right, I made 21k realized gain. I could have taken that. I would have paid 20% on that. So 10% would have been 2 grand. It's around, let's call it 4k. But however, I took a 10 grand loss, 10.5k loss, which then brought it down to, let's call it 11k. 20% of that, what is 10% is 1,000, 2,000. Let's call it 2,000 just for there. So I've saved in taxes 2k roughly, right? So then if we add in the 2k to that, 6.5. So I'm now minus 5.5 grand. So from the initial minus 10.5 that I sold my shares at, with the premium that I gained and with the tax loss harvesting savings, my actual loss is somewhere around the 5.5 grand, right? So it's not as big as the 10,500, but it's still a pretty big loss, right? So that's the reason why I sold the shares when I did. The main question that you got to ask yourself is, why did I buy Workhorse in the first place? Why was I selling puts on Workhorse? And the honest answer was, or is I was chasing the premium, right? The premium you could make on Workhorse at the time was around 1 to 3% a week. Insane, right? I'll be honest, I knew what the company did, right? But I didn't really look at their financials, didn't look at their balance sheet, didn't look at the management team, didn't look at any of that stuff, right? And ultimately, they're unprofitable, and the market environment has caused this kind of issue. And I got caught up in the growth era in mid 2021. Because if you go back on it, look at it, like Workhorse, right? Workhorse was, a at the home probably a $42 stock at high, is now trading at $3.57, right? So imagine if you started owning shares at that amount, right? So that here is, I've learned a lot during that period, and not to do that again, right? I do own stocks like Palantir. I do own stocks like, ChargePoint inside the other portfolio, and I'll show you ChargePoint as well, which is not in this portfolio, but you can look at ChargePoint, right? ChargePoint had a high of 48, it really tanked today, went down by about 8% today, or 8.46. It's now down to 15.25. I own, I think it's 2.5 or 2,600 shares. So these numbers are a bit older, because I did get assigned 200 shares at 18 and 18.50. So that has brought down this cost basis slightly. But I did not sell ChargePoint. Why? Right? Because in hindsight, I shouldn't be in ChargePoint. Right? That I'm going to make that clear. Right? In hindsight, I shouldn't be in ChargePoint. Shouldn't really be in Palantir either. However, right? I actually believe ChargePoint will be above $27 within the next 2 years or so, right? I'm happy to wait 2 years. And the reason why I'm happy to wait 2 years, it could be a lot sooner than that, because it did get up to like just above $21 like 3 days ago before it started tanking again. Um, I do believe that ChargePoint will be above that with the EVs and ChargePoint owning the market share. So if you compare the companies between Workhorse and ChargePoint, yes, I admit I shouldn't be in charge, shouldn't be that heavily invested in ChargePoint, right? There's other stocks out there that I'd rather be deploying, 60, 70 odd K into other companies. But I'm comfortable with this. Like I'm comfortable with Palantir. Palantir data analytics, sticky business model. Their government contracts is growing. It's flat. Well, it's growing but slowing down. But their private, but their publicly traded company revenue, their accounts they're winning is growing. It's a sticky business model. I understand it. Used to work for technology companies. I get it, right? Workhorse didn't really get, right? So, you know, and that's the difference between why, in hindsight, I don't want to have that much invested. So again, I have been buying puts all the way down, and then I've also been selling covered calls as well below my cost base. I've got a number of videos on ChargePoint. So, and I'm still making anywhere between $200 to $1,000 a week, depending on how aggressive my covered calls are relative to the current price. When it goes up, and I'm too close to my cost basis, I get a bit worried. But I'd rather be earning this a week and not having to panic about rolling up every time ChargePoint goes up by 3-4% than going closer to the current price and earning that amount. And I'm quite happy getting $600 a month. And if you think about it, $600 a month, let's say, um, 6, 8, 12, 15, in about 4 months, I can sell another put, and I still have cash in that account. I'm still selling puts. And I still, from what I'm generating from this covered call and put income that I'm making, because I'm doing puts way below the current price at the moment, right? And I'm still picking up $30, $40 a week just by doing puts. Then covered calls, you're adding in an extra, 200 to 1,000, depending on how aggressive I want to be on it and how many contracts I want to put up, right? Because I can go quite high out the money, and I've talked about this before, because I've got volume. I've got 25 contracts, right? And then I'm quite happy taking 10 cents on 25 contracts. So 10 cents might be at a 19-20 strike, where the price has to go up by 20% in a week to get to that price. Unless you have little blips like this little movement that happened here. So much mess on the screen, I'm really sorry. But hopefully you guys understand what I'm talking about. I'm quite happy to do 25 contracts at 10 cents a contract. It's $250, right? And what's the odds ChargePoint is going to go up 20% in a week? Okay, it happened over here, don't get me wrong, but it's while it was doing this, I was doing that kind of movement, and then I'm adding more and more contracts. So still making money, still making 250 a week. Workhorse, yes, of that 3 grand, some of that was covered call income. The majority was the puts I was selling that I got assigned on. But because I had about 1,300 shares of 13 contracts at a $3, $4, $5 stock, even if you go like, 550, you're only getting like $3 per contract. So, I was making between $30 to $70 a week. Right, okay, still money. I'm not going to say no to it, right? And it's helped me reduce down the 10.5 grand liability that I had to pay out. But shouldn't have been in Workhorse in the first place. And so that's the bit I just wanted to kind of get across to you guys that, you know, yes, I've taken this loss, but that's fine. It's offset some of my gains. I still made money inside the tax year, made some good amount of money inside there, um, and it's been a slow start for 2022, and I'll show you what my gains and my realized gains as time goes on inside that portfolio and all of these stocks. So if you guys want me to do any videos on any one of these stocks that I own, more than happy to do so. But hopefully you guys have learned from this and can learn from this inside your trading. And there's some screens or some stuff on the screen now. And I should see you guys in the next video.